Hello everyone, good morning. Welcome to another exciting morning market review. This is Rally Trade Morning Market Review. We do this every morning, 8 a.m. to 9 a.m. One solid hour of market analysis where we give you tips and tricks on how you can drive the markets profitably. So guys, good morning once again. My name is Emmanuel. We have just few persons in the room. We'd like to give maybe 2 to 3 minutes for more persons to join us. Then we can start the analysis, okay? So guys, I want to believe you guys can hear me. 2 to 3 minutes, please, then we'll get back. Thank you, guys. All right, guys, good morning once again. This is our money market review from Rally Trade. We do this every trading day, Monday, Friday, 8 a.m. to 9 a.m. One solid hour of market analysis where we try to navigate the market profitably and, of course, drive the market. Okay. So, once again, welcome. My name is Emmanuel. So, we'll run through fundamentals and we'll now step it down with technical analysis. Okay. Fundamental analysis is very important. But before that, a little sound check here. Just get straight to the chat room. Let me know if you can hear me, please. Just one or two persons, just type I can hear you so that we can kickstart this. I can hear you. Nobody? So guys, we have about 60 something persons here. Please let me know if you can hear me. Okay, Mr. Chinedu, thank you.
We can hear you, but we can't type because it's not going.
It's not going, but somebody just type now. Chinedu type,
Maybe
Moji
on
type.
a personal this thing. If not, it's not going.
Okay, you can type direct to me now. Thank you for that. Ekpemski. This your name is fine. So let's do fundamental analysis first. So I'll share my screen real quick so that we can get into that. So I've been able to share my screen now. You can see my screen. So this is Forex Factory. So the news for today is actually, today is Thursday. So this is Thursday. For those who are joining us for the first time, I would like to do this for you. So we use Forex Factory to check for fundamental events. It's actually a calendar that shows macro events, fundamental events that cut across major economies of this world, right? So we're actually looking at these events, or if you like, this news from these economies because they can affect their domestic currency. And of course, you know, we do trade the domestic currencies of these major economies, right? So that's for those of us joining us for the first time. So we have GBP, we have JPY, we have AUD, we have Euro, we have all of the major currencies, right? Now, over here is the currency, over here is the impact. Impact is the volatility. So another word for impact is volatility. So you want to consider the volatility of the news. Not all news carries the same volatility, right? Just like in Nigeria, not all the governors in Nigeria have the same weight. You know what I'm talking about? So the ones with yellow flag here is low volatility. So that means if the news are released, they may not really show or have any impact on the chart. So we'll move to the ones with high volatility. So the ones with high volatility, when these news are released, as the name implies, high volatility, they will cause some shaking, some rocking of the market, some rumbling of the market. So you understand what I mean, right? So this is the impact of the news. So this is the caption of the news. So this is CPI. So today we have CPI for the dollar, right? CPI is Consumer Price Index, right? It's one of the leading indicator that we use to measure inflation in an economy. So CPI measures the changes in the price of goods and services as purchased by the consumer. So it is measuring inflation from the consumer perspective, right? All right, you understand that. So we have different shades, or if you like, different categories of the CPI. So this is CPI itself, year by year, month, and this is core CPI. Okay, so and that same 130, we also have unemployment claims. So unemployment claims are those filing for unemployment benefits. In other words, it gives you an insight or an idea of the unemployment rates in the US, okay? Because if you're filing for unemployment benefits, you're claiming you're unemployed, of course, it shows that there could be some signs, or it shows that you're actually unemployed, okay? Because they only give them some stipends. So, Mr. Douglas, there you may want to put off your video, okay? Please. Okay, thank you. So How do we trade it? You just look at the actual. So the actual will be out by 1:30 p.m. Nigerian time. So what you want to do by 1:30 p.m. Nigerian time, you want to be on this website so that you can check the results. So from the result, you can tell whether the currency, I mean, the dollar will be strengthened or it will be weakened, right? To be strengthened or it will be weakened. But from recent happenings, looking at what's happened on the chart for some days now, the dollar has been strengthened. The dollar has been gaining some strength. That may just be the direction. That may. So you may want to write it down, may. That may just be the direction, right? So in other words, if the values here are green in color, is good for the domestic currency. So that means you want to buy the domestic currency. You want to buy the currency, not currency pair, right? You want to buy the currency. How do you buy the currency? You buy the currency. The currency can be the base currency or the quoting currency. Any position you can still buy. If it's the base currency, you do an outright buy on the pair. If it's a quoting currency, you do an outright sell on the pair. Selling the pair means you're selling the base currency, and of course, you're buying the quoting currency. I already know you understand that, right? So without much ado, that's one way you can trade it. So you wait until the result is out, then you can trade. But one of the challenge in doing that is that you may be late, right? Except you are like Flash. I mean, very fast, faster than 1 millisecond. So another way you can use to trade is to go and set trap on your chart. You can get to your chart before 1:30 and do a buy stop and a sell stop, right? Just any direction the market wants to go so that you can trap it, right? Now, that particular method works very well. It works up to 70% of the time. It works very well for a high volatility news. Just give me 1 second, please. All right, guys. So you can do a buy stop and a sell stop. You can do a buy stop and a sell stop, right? So if you do a buy stop, if you do a buy stop just some pips above your market price, that would be maybe up to 10 pips above the market price. The current market price, I mean, they do a sell stop. I want to believe some of you must have done this before, right? So it works very well on high impact news, especially on CPI, not actually all the high impact news. On CPI, any news that will move very well, right? That you're convinced that will move very well, especially CPI, NFP, and of course, maybe some FOMC speech and minutes, right? So if you have not done it before, you may as well try it. If you don't know how to set pending order, you can learn it before 1:30 p.m. for today. So I think that's the major high impact news we have for today, right? Another challenge we may have is we may have the CPI coming out good, and of course unemployment claims coming out bad, right? So in such scenario, the market may just move in both directions, right? The market may just move in both directions. But guess what? Inflation is a stronger economic indicator, right? So inflation is a stronger economic indicator compared to unemployment claims. So we expect the market to move more in the CPI direction. So guys, please, you want to mark this on your like set your alarm, right? By 1 o'clock today, your alarm should maybe that you can make money. Don't let this one pass you by, guys. Don't let this one pass you. So I think we can move now to technical analysis. Now, but I think I can still show you how you can be able to power. Just a minute. Yes. So if you're here and you don't know, and you cannot set, you cannot do the straddle method. Straddle method, I mean, is buy stop and sell stop. Let me see you, please. You are part of this call and you cannot do a buy stop and sell stop during the news. Let me see you. Get to the chat room, please, and let me know, please. If there's nobody, we'll just continue. Fine. There's nobody, right? So everybody here can do a buy stop and a sell stop. But if you cannot, you can talk to me. So I think it took some time, Mr. Stevie. Mr. Stevie, the Strado method is actually what I just explained. You buy stock and a sell stock some minutes before news. Please, you want your audio, okay? Let me do it from here. So guys, let me share my screen really quick with you so that you can get value from what I'm talking about. I'm sure you can see my screen right now. So this is actually what the Strado method looks like. This is exactly what the Strado method looks like. It looks like this. So this is the market price. You set a sell stop. You set a take profit. You set a buy stop. You set the take profit. Please, am I communicating? Are you getting value? You set, now the news is by 1:30. By 1:20, you set a buy stop. You set the profit target. You set a sell stop. So I want to believe you can set buy stop, right? And you can actually set sell stop. So you just do this. Now the profit target should not be too far, okay? So you can do like maybe 20 to 30 pips, right? Most times that first move, the first 5 minutes move may not get more than that. May not really get all to 50 to 60 pips. So 20 to 30 pips, you're good enough. Then of course, then your job from that 10 minutes to the news, that means that 10 minutes window, your job is to keep adjusting. So your job is to keep adjusting and maintaining this distance from the market price, right? So remember from that 120 you're setting it, the market price will keep moving, right? So you keep adjusting your buy stop such that the distance is still maintained, right? So as you can see on this picture, you can see that the sell stop has bigger distance from the buy stop. So your job is to be adjusting it such that you are still maintaining 10 pips distance, such that once the news is released, the market moves forcefully in one direction, something like this. Then, of course, something like this, the market moves something like this. In fact, this particular picture I'm using to explain to you is the CPI for May, right? So a couple of months ago, if you look carefully, this is CPI for May. Look at this picture very well. This CPI for May, right? So it means if today's CPI comes out like this, come on, guys, you will as well be paying yourself at the middle of the month, right? Others get their salary at the end of the month, or you can get yours at the middle of the month, right? Today is 10th now, so you can get yours at the middle of the month, so which is good, right? So if you have small capital, guys, you can do top up on your account right now. Call your account officer, add little money to your account so that you can increase your lot size a little bit, okay? So you can increase your lot size a little bit. So let's say you have like 100K in your account. You call your account officer between now and that 1:30. Do top up on your account. Maybe you can add up to 300, 400 to make it 500. At 500, you can start using 0.1, 0.5. You can increase the lot size. Guys, thank you very much. So let's switch over to technical analysis now. I think we've done enough justice for. You're asking if it can be done in gold and US dollar. Why not? In fact, that's the best place. Hey, I'll give you one secret though. That's the best place because you can set it there and of course put take profit levels. Don't put your take profit too far, okay? But for you to trade gold and US on the guys, you need to do top up on your account. Don't go there with small money. If you have 500, top it up to 1 million naira. Enter gold. Top it up. Call your account officer. Do deposit now. of course, you'll be fine and good. Now, at the end of the news, you can get back to me how you traded it. I'll drop a number at the end of this session. Get back to me how you traded it, what happened, right? If you made some profit, please do get back to me. So whatever is the outcome, please do get back to me, okay? Get back to me so that I can still put you through. So guys, let me switch my screen now to the chart so that we can do a little bit of technical analysis. Guys, are you ready for me? All right, I perceive my spirit that you guys are ready for me. So this is my chart right now, guys. I want to believe you are seeing my screen. So this is US on this is my chart. So just type chart whether you can see my chart. Just type chart, please. Get to the chat room, just do a chart, just type chart, please. I'm waiting. Okay. But this is your chart and means chatting with somebody. This is the real chart. CHART. But guys, I understand. Thanks for the response this morning. I really appreciate that. So you're seeing my chart right now. So let's do USD index. I'll do this very quick so that we can analyze a lot of instruments. So let's do USD index. So USD index, this particular USD index, you can get this on your phone. Those of you using only phone to trade, you can still get this on your phone. So before you place a trade, maybe on any of the USD denominated currency pair or any of the currency pair that has US dollar in it. So you may just want to check what is happening here because you can see the true strength of the dollar being shown on the US index, right? So from what we are seeing, I want to believe you are equally seeing this with me. Can you see my hand? Can you see what I'm doing? It is actually steep, all right? Going up aggressively. So that means we must have shifted to the upside, right? The market must have shifted to the upside. No doubt it has shifted to the upside. For those of you that have been following up our analysis here, you should have been able to catch this movement because by now I want to believe you understand when the market shifts from one direction to the other direction. You know, trading is directional. That means if you are in the right direction, you make profit. If you're not in the right direction, the market will punish you, or the market will deal with you. So trading is directional. So you want to know when the market have shifted from one direction, or you want to know when the market shifts from one direction to another direction. So how do you know that? Let me show you. We call that a market structure shift. So look closely. This is movement to the downside. This is retracement to the upside. But guess what? It could not trade higher than the previous high. That's a sign of a downward trend. So it's impulse to the downside again. Took out this low to form a new low. That is tapping the liquidity, the target liquidity since we are driving downward. How do we know that we are driving downward? We are trading on lower highs, right? So the market printed a new high, but the high is lower than the previous high, right? So this high is lower than this high. This high is lower than this high. Of course, we are moving downward. The market is going downward. We are not moving downward. It's the market that is going downward. We cannot go down. We're only going up. I hope you get and you understand that joke. So let's continue. So this market is actually on the downward trend. And of course, we pulse downward again. Watch carefully. This low is actually lower than this low, right? So if you look at this carefully, you can see that this is a strong downward movement. But the first time we're able to trade above the highs, guess what? For this downward movement, all the highs are lower than the previous high. But this is the first time we got a shift, right? A violation of the tenets of a downward trend. By that, I mean the market was able to trade above this high to form a new high. So if it was, the market actually smash this high, right? Right? Smash that high, smash this other high. So that alone shows that we have shifted to the upside, right? So once you catch the market have shifted to a new direction, then you can now start taking your bias in that direction. So that means your buy trade, you now start buying the dollar from here, right? You may not necessarily be buying the dollar from all of these positions. Why? Because you'll be waiting to see the shift. So from here you start buying. So that's why retail traders are usually they normally enter a little bit late on the market, right? So it is their tradition to enter late. Why? They are small money traders. They are not big money traders. So they wait until the market have showed, the market need to show its hand. The market needs to show you the direction. Yeah. You cannot detect the direction. The market will show you, and wait for the market to show you. Most traders, they think their capital, you are trading where we have millions of dollars by the banks also trading. So you need to wait for the market to show you. So this is the market showing you that I'm about to go up. So once these highs have been smashed and then the market has validated these highs, then you can now start. So that means from this particular area, which date was this? This is 2nd of October. So from 2nd of October, it was actually going to be buy for the dollar. So that means if you're buying the dollar, if you open something like Euro USD, then you look out for buy opportunity, right? So if you open something like Euro USD, you look out for buy opportunity. So this is Euro USD, guys. So if you open something like Euro USD from the 10th, right? Where is the 10th here? Oh my God. So Control Y there from, where is the 10th here now? From the 2nd, right? It's actually 2nd, you know. Let me go back and check. This area was actually 2nd, right? Let's look at it. Okay, 1st, 2nd, around 1st and 2nd, right? So that was when we got that shift. We got the shift somewhere around 1st and 2nd. So guys, back to Euro USD, right? So just look closely. I am actually, so look closely. This is a line, right? From so around this area. Can you see this line around this area? Just look down, you will see 1st and 2nd, right? So around this area, I'm already looking at for selling Euro USD. Why? Because I've already seen that dollar is gaining strength, right? So guys, if you're selling Euro USD, just imagine using this software. Come on, this software is a powerful one. The arrow is pointing downward, because now you are not just believing that this arrow is pointing downward so that you can sell. No, you have done the analysis already on the dollar. You've seen that the dollar is getting stronger. The dollar have shifted to the upside. The dollar is getting stronger. If dollar is getting stronger, all of the currency pair that has dollar as the putting currency will start going downward. So from here you start selling. From here you start selling, right? You start selling. And of course, if you sell the 1st day, the 2nd day, you sell the 3rd day, and the market keep going in a very wonderful downward trend. Impulse to the downside, retracement to the upside, impulse to the downside again, retracement to the upside. So you understand that, right? So let's leave that. Let's come to right now. Right now, what is the market doing right now? Because that one has passed, right? That one has passed. So the reason why we're analyzing that is that you need to understand how the market moves, right? Because analysis is done at the left-hand side of the chart. So that's just what we have done. If you look at your chart, left-hand side is the past, the right-hand side is the future. Technical analysis is analysis of the left-hand side. So we have just done the analysis. Now looking at what is happening right now, right? So let's go back to that USD index again. So we are already seeing strength to the upside, right? So this was the retracement we got, right? So this is the impulse again to the upside. So we have impulse, we have traded above this high, that's a break of structure. Now for me, I'll be expecting a retracement, right? But that retracement may happen immediately or it will take some time to happen, because whenever the market is impulsing like this to the upside and we have series of bullish candles, 1st bullish, 2nd bullish, 3rd bullish, 4th bullish, that's a sign of strong momentum, right? That's a sign of strong momentum. And if market have that kind of strong momentum, then it may just continue going upward before the retracement, right? So dollar is strong, but we're expecting retracement. I hope you understand that. Dollar is very strong technically on the chart because you get that information from the chart. Remember, you can do nothing against the chart, right? All you do is for the chart. It's just like you can do nothing against the truth. So The dollar is strong. We're seeing it from the chart. But because we have done the break of structure, I mean, we have tapped the target liquidity. The market has already gone for the target liquidity as a retail trader. This area is called target liquidity. That means the high, because the market on an upward trend, the market normally goes for the high. So the high has already been smashed. So we'll be expecting a retracement. But the market can do a little bit more impulse before that retracement. So, Oladimeji, you asked, is it possible to get support and resistance zone on the phone? For now, you just need to draw it by yourself. Okay. For now, you just need to draw it by yourself. Identify it by yourself. Use a rectangle. You can use rectangle to draw it. For now, maybe in the future, we'll have a kind of phone that we can install those softwares. But for now, you just identify the double bottom, triple bottom of the previous chart of the left-hand side. You use rectangle, color the rectangle, the fee color, maybe a blue color, you drag. So that's what you do on your phone. I hope you understand that. So on Euro USD, so it means, so for taking it back to USD, it means Euro USD is still on the downward trend, right? I hope you're following up this analysis. So arrow is also pointing downward to confirm that, right? So we are going downward. Sorry, the market is going downward. So this impulse to the downside, okay. So the market did a little retracement. So I'm expecting a better retracement of this market. So let me tell you what I'm expecting. So see what I'm expecting here. I consider these two as one because this is just a chopping movement of the Asian session. I consider this as a direct impulse to the downside. So I'm expecting this kind of retracement. The market should retrace this much, right? This much, maybe up to 38% of the impulsive leg, right? Or 50%. Or the market should give us a premium price. So the market should retrace this much before another impulse again to the downside. So looking at the left-hand side of the chart, this is exactly how the market has been moving, right? So it impulse like this. All of this, see, it impulse like this, right? All of this is considered a retracement, right? All of this is considered a retracement. Why? Because this is now the target low, or if you like, the target liquidity, right? So it retraces like that, offering premium price so that it can attract more sellers. Then, of course, the next time it goes down so that I can smash this low to form a new low, right? I hope you understand that. So it smashes low to form a new low. So in the same way, we will be expecting a little retracement again before it can go down. So before you can sell for today, you wait for a little retracement to the upside. You understand that, right? Before you can sell Euro USD, you do a little waiting. Waiting is trading. Sir, waiting is ready. So do a little waiting for the market to retrace a little bit to the upside before you can consider selling, right? Now, but guess what? There is CPI for today, so we may just be experiencing choppy movement. I mean, low volatility movement on our chart because of traders will be waiting for CPI. You understand that? So GBP-USD real quick, GBP-USD real quick. GBP-USD real quick. Over here in GBP-USD, I have a trade running here, right? So that trade was in profit. It has retraced a little bit now. But the trade is still in good shape, right? It's still in good shape. I'm expecting an impulse again to the downside, right? So from our analysis we did on GBP, on USD index, we saw strength in the dollar, right? So that means, and we're expecting a retracement. That retracement is what is pushing this price upward right now. So on this same instrument, let me just drag GBP-USD real quick. So this is GBP-USD real quick, guys. So, Mr. Olumide, you said, please check US 500 and gold. I'm currently on sale on US 500. Okay, that's fine. You're selling US 500. That's fine. I hope you have good capital that is good enough to hold your trade. But you're making profit. You said you are currently selling, right? On profit, but the news today, okay, let me read complete. Please check US 500 and gold. I'm currently on sale, US 500 and 3 at Okay, you entered at 5843.4. Currently on profit, but the news today, okay, you're currently on profit, that's fine. But the news today, I don't know if I should still maintain my position or run for my life. Okay, don't run for your life. Now, if you're on profit, you may just want to keep it for more profit if you're selling. So what you want to do is you want to protect the profit, right? A better hand, remember a better hand. So you may just want to protect the profit. How do you do that? Adjust your stop loss from you're selling, right? So adjust your stop loss or move your stop loss, I mean, from above the entry price to below the entry price, right? So it means you're moving your stop loss from the risk zone to the profit zone. Do that, please. Move your stop loss from the risk zone to the profit zone. So let's say you're on profit of maybe 50,000 naira. So you adjust your stop loss, place it around 30,000 naira. Let me say it again. Mr. Olumide, right? Let's say you're on profit on 50,000 naira on US 100. You adjust your stop loss from the risk zone, I mean above your entry price, and bring it below your entry price because you're selling, and place it somewhere around 30,000 naira, right? So if the news is released and it moves very well in your direction, fine and good. Before you know, that 50K will increase to 100K. But if it's the news released and it's not going in your direction, to just knock you out with 30,000 naira profits, right? But remember, you have that one by the side, and of course, you will not see trade the news. So same thing is happening on gold. I'm currently in profit on gold, but on buy. Okay, you're buying gold and making profit, but I fear for the news. What do you advise, please? Okay, it's the same thing. One advice to kill those two bets. Okay, one advice to kill those two bets. So, Oladimeji, you say I am also on GPUSD trade, sir. Okay, I can see even me too. I'm selling GPUSD now, right? But I fail to take this profit because they so all of these profits you see, all of this why there was profit, right? I'm also on sell on GPUSD, but the market is moving against my direction. So see where I have my stop loss. So if you place a trade, then you should have stop loss. Can you please show it on your screen? Show what on my screen? You mean adjusting stop loss from risk zone? You can do that now. Move your stop loss. If you can set stop loss, then you can move it. You say you are scared of the news. The secret of this life is to have no fear. You write it down somewhere. You say you're scared of the news. Don't be afraid. Don't be afraid. If you are afraid, it's not good. It means you will not succeed. The secret of this life is to have no fear. And is to have no fear. Thank you, thank you, thank you. I really appreciate that. So let's come back to GPUSD real quick, right? So I have a GPUSD trade running here, as you can see. This is my GPUSD trade run, you know. So I entered this trade when on the 7th, right? 7th was somewhere here, right? So it gave small profits, so this is 7th now, as you can see, right? He gave profit here, gave profit here, gave profit here, but this is actually a support. So I was actually optimistic for the market to break the support, right? So I'm optimistic for the market to break the support. So let's see how much profit this thing gave. So this is around 7K, right? 7, 9, 8,000. Yesterday it gave 9,000. But it has not got into my take profit. It has not got into my take profit. So then I have to stop. So I'm actually on a sell, right? But that trade was placed on the 7th, right? It was placed on the 7th. So for those of us here now, let's analyze and see what you can do for today. So US is very strong right now, as you can see. USD is very strong, but we're expecting a retracement. This retracement on the dollar is what we call impulse for GPUSD to the upside. So GPUSD should be able to impulse a little bit, but remember that is considered a retracement, right? So we need this to retrace a little bit, perhaps to retrace to resistance turn support. As you can see, this area becomes a resistance turn support, right? So if resistance is turn support, they will be expecting an impulse from that area to the upside, smashing the new high to form a new high, the previous high rather, to form a new high, right? So that is dollar gaining strength right there. Another thing that might happen is that if this particular US index is very hungry for liquidity because this movement looks very steep. It may want to smash this low, right? So another movement it may want to smash this low before it impulse to the upside. So, but that depends on the news, right? So from now to the time of the news, the market may just move in a choppy way. We may not really see enough movement on the price. All right. So so on the GBUSD, GBUSD right now is rocking is rocking a support, guys. This is what we call support, right? And you know it has tested this level several times. One thing about support is that the market may just be testing the support, as you can see. So these several tests mean that this level is hard to break, right? So you can see several testing of the support. Now, this news that we're expecting may just be what will break the support. That's if news comes out good for the dollar, right? That news will carry enough momentum, big enough, good enough to break the support. So that means during the news, we may just see this movement, take no guys, we may just see this kind of movement, right? Since this area has been very strong, remember, if it is soft, you do it soft. Or if it is easy, you do it easy. If it is hard, you do it hard. This news is experiencing, the market is, this area is very hard for the market right now to break. So guess what? It needs a harder movement to break it, right? That harder movement may just be the news. So the news may just be what will break it the market to the downside. Okay. Now, but then looking at the analysis from where we are coming from, as you can see, this is actually a very big downward movement, as you can see, right? No doubt. But the market has gone into consolidation, as you can see. But this consolidation is actually favoring the sellers, as you can see. The consolidation is favoring the sellers. How do I mean? Look carefully, you will see that even though it's consolidating, it keeps printing lower highs, right? It keeps printing lower highs. So this is a low, okay, this is a high, right? So it created for us a lower low, as you can see. Then of course, it did a little retracement here, right? So all of these can be considered the same movement because they are almost at the same level. Then of course, it did a low that appears lower than this low to form a new low. So even though it's consolidating, it's on the support. Look carefully, sir. Wisdom demands that you observe closely. So when you observe closely, you see that it's lower than this low. Now this is the high it formed before that low, right? So all of these are considered internal movements or internal structure, right? So this is actually one leg to the upside. So this is considered a retracement. Guys, this is considered a retracement. So this high, this is the actual place for this high, right? So the market needs to trade above this high for us to conclude that we have shifted on the lower time frame, right? Still on the lower time frame. So these are several highs that you need to break. You need to break this high, break this high. So for now, this is only a retracement to the upside. For those of you that want to scalp, right? If you want to scalp GPUSD, you can scalp it with a buy. Let me show you how to scalp real quick. Man, we are doing a lot of things this morning. I hope time will permit us. So if you want to scalp, you drop down to 5 minutes or even 15 minutes time frame. But I consider this retracement until this high is taken out. Until this high is taken out. So that means I will be on the trade until this high is taken out, right? Until this high is taken out. I will be on the trade. I will not chicken out of the trade until that high is taken out. So, but if you want to scalp it to the upside because of its bouncing off the support, why not? You drop down to 5 minutes time frame or even 1 minute time frame. But let me not take it to 1 minute. Oh my God. I hope you get all before you can scalp. So let's see the market have broken structure on the lower time frame. So guys, if you want to scalp, you drop down to a much lower time frame. So guys, if you want to scalp it, look carefully. This is a high. We have broken the structure. But then if you're scalping, you know that you are scalping, right? So if you watch, we have actually broken these structures. We have traded high, right? Okay, so we'll be expecting a little retracement, right? So that's for those of you that say, Emmanuel, I cannot wait. Let me scalp fast. So you wait for this on GPUSD, you wait for this retracement to come back to this local and temporal support, then you do a buy on this level. Remember, it's different from the normal trading that you want to wait until you see your time. Guys, let me move to another instrument. Let's do GPJPY. I like this instrument, the GPJPY. If you want to make good money, you should be trading GPJPY. GPJPY is one currency pair that's let's say you don't want to trade gold because of you have smaller capital, you can switch to GPJPY. It's one currency pair that can move like gold. Just imagine catching all this move, guys. Guys, imagine catching this move. See this move, pew. See this other one, pew. Don't know why I'm using pew, but you understand pew. This other one. So just imagine catching this move. Imagine catching this move, guys. So GPJPY is one instrument that you can trade, and of course, most like you're trading gold, right? So if you watch carefully, this is impulse to the upside, this is retracement to the downside. Careful enough not to trade below this low. See where it stopped, right? Before that place is support. It impulse again to the upside again, trading above this high to form a new high. I hope you understand that. That's a break of structure. The market traded below. So if what this is a very beautiful upward trend, guys, you can take advantage of this. Of course, you can do well here, as you can see. So you can agree with me. This is actually this is okay. We have not traded above this high, right? Okay, we have not. So the market has done another impulse again, but has failed to trade above this high. And I hope I do know it to trade above that high. So you wait for a little retracement, right? Wait for this retracement. So the retracement should retrace up to this level, right? So I'm seeing an area where the market should retrace. So you should be buying GPJPY around these values, right? So you should be buying around 194. So if the market retraces around 194, 194, 118, 194. So you should be buying around that area. So if the market retraces around this area, you should be buying, okay? Or you can be able to place your trade around that area. So that's for GPJPY. But guys, stay long on the GPJPY because I'm very sure you make money from it, right? Wait for retracement to the downside. And my bias is to buy this instrument. So if the news pushes the market downward, fine and good. See, if the news pushes this GPJPY from here down here, let me show you. Just stay with me. If the news push the market from here down to this support level, guys, you should be buying massively here because it will still it will not see opportunity to smash this red, call it red, write it down, ROEH, relatively equal high. So remember, relatively equal highs, ROEH, relatively equal high is a magnet for the market. It's actually a liquidity trap point, right? Where the market knows that a lot of orders to be around that area. The market moves towards the area of high liquidity. So the market will actually like to smash this area to form a new high. Guys, you understand that, right? So let me look at the comment section, answer some questions. They will now move to gold. Of course, we also do we look at gold. They will also do. Okay, fine. Christy, Derek, I caught the move on GPJPY on Friday. Sweet. I like that one. Yeah, Christy. I think the money you made at
I think it's sweet. If you trade JPJPY and make some money, it's sweet. I like that. So that means you understand what I'm talking about. So for the rest of us, you can catch the move again, right? You can catch this move. This move is sweet move, I can tell you. Just wait for a retracement downside. When it's pumping upward, it's usually very strong. Man, you make enough money for it. So I think we've done three instruments now, guys, with market structure analysis, break of structure, market moving to the upside, you buy, market to the downside, you sell. So let's do gold right now. Well, before gold, let me look at the comment section, please. Do you have any instrument you want to analyze? Gold, I want to do gold and maybe one of the index. So please comment section right now. No questions here. Okay. Somebody say no. Is it true? Is it true there is no audio? There is audio now. Okay, Emmanuel Neil, namesake there. Because you're doing good. So okay, let's do US 100 very quick. So this is US 100, guys. You asked for it, now you have it. So on this US 100 very quick, let's look at H1 time frame. So once you open an instrument like this, right, the first thing you want to do is you want to tell yourself, or you want to get what to call directional bias, right? So you want to establish the bias. So what is the bias? Okay, the direction you want to trade, right? The direction you would like to trade. Now, bias is even from an entry, right? So once you get your bias, the next thing is now to just time your entry, or the best time, or the best position, or the best price to enter. Those two things are two different. So the first thing that comes to your mind is, okay, you have opened the instrument, very fine. What's the next one? What's your bias, right? So this is how you can establish a bias. You can establish a bias with a daily time frame. So let me switch to daily time frame very quick. So yesterday was what? Bullish. Day for yesterday was what? Bullish. So that's one way you can get bias, as you can see. That's one way you can get bias. Now, but then once you have your bias, take note, you are not buying, or you're not just trading anyhow randomly. No, you wait for the market to give you best price, right? Best price for a buy is a discount price below 50% Fibonacci. Best price for a sell is a premium price above 50% retracement on the Fibonacci. So once you get your bias, the next thing is now perhaps you may need to wait until market present itself, or the market, or the price comes to you. So you wait for price to come to you. For example, this is a daily time frame. Look carefully. Let's assume this yesterday was a bullish day. The day for yesterday was a bullish day, right? So if day for yesterday was a bullish day, there was a high probability that yesterday will be bullish. Is it not? Is it not true? Remember, life is lived forward or understood backward, right? So if you're trying to understand the chart backward, if this is today, this is yesterday. So yesterday was bullish. There's a high probability that today too will be bullish. Kele, you're raising up your hand there. Drop your question and type it. So if yesterday was bullish, there's a high probability that today too will be bullish. But guess what? See what happened. It first retraced a little bit downward, perhaps to a discounted price, as you can see. It first retraced before pumping upside, right? So there is also a high probability that today too, remember this is daily time, today too might just retrace. So as it's doing, as you can see, it's showing red bearish candle. It may just retrace before it can pump again upward. Remember there's news, and all of this technical analysis. Pump again upward. So establish your bias. Now let's drop down to 1 hour time frame again. Let's drop down to 1 hour time frame again. So on the 1 hour time frame, you can be able to still see, or to still establish your bias still on this 1 hour time frame. So by that I mean we have seen impulse to the upside. We'll be expecting retracement to the downside, guys. So we have seen impulsive moves. So this is a very big impulsive move to the upside. So you can see the market is trying to do some retracement, right? So you can use your Fibonacci. Now, of course, for what we are seeing right here, this is a bullish movement, right? This is a bullish movement, right? Or the price is bullish. So there is no, it's just very clear that it's bullish, right? So it means you may want to wait for a retracement. So that retracement, Fibonacci may help you to know the right retracement, right? So you drop from this low to this high. So if the market is able to retrace into discount will be, the market should be able to retrace very well into discount. Discount is anywhere below 50%, right? But for a high momentum impulse, the market may not get to 50%. It may just stop at 38.2%, right, before impulsing to the upside. Now, what you need to see to know that the market have stopped retracing to the downside, you need to see something like a bullish hammer, right? So a bullish hammer will have this kind of shape of candle. So you will see a candlestick that has this kind of shape, a candlestick that has this kind of shape. So once you see a candlestick that has this kind of shape, right, around this area, around this 50% area, then it shows that the market is about to start going upward. Or you see what we call a bullish engulfing. By bullish engulfing, I mean you see two candlestick pattern. The first candlestick is a bearish candlestick. The second candlestick appears to be a bullish candlestick, bigger in size, and so they will just be side by side like this. So when you see such movement here, then you want to buy. So, but for now, you wait. You wait. You don't want to be so aggressive to place a sell right now. So you wait for the market to move down to this area before you can do your buy. So let's do gold so that we can wrap up gold right now. So let's do gold. The last instrument. So guys, gold is doing pretty much the same thing like that instrument we saw right now. But if you look at gold carefully, analyzing it from the chart, you can tell that gold is actually, yesterday we saw gold, yesterday we saw gold broke this low, right? Impulse to the downside, retracement to the upside, guys. Impulse again to the downside. So that means gold have shifted to the downside technically from the chart, right? So this is gold is trying to do a retracement right now. Gold is trying to do a retracement. So if you are selling, like the person that said he's selling, if you're selling this instrument gold, you may want to still be on the trade, right? Be on the trade because it's only doing a retracement. The news may just come out good for the dollar and gold may just dump more. Okay, gold may just dump more to the downside. So you may want to still wait a little bit. So we are already seeing what we call a fair value gap, right? So the market has printed an area that will be so attractive for the price, right? So this is an area. So this price may just want to retrace inside this area to mitigate this area before moving downward, right? So from now to the news, we may just expect a little movement of gold to the upside inside this area. So inside this area, then you may want to look out for your sell opportunities, right? So that area is around 2624, 263, 262, 262 to 263. So around this area, guys, it's actually an area, not a single price. You look out for sell on conditions, right? On gold, because gold on the chart right now is bearish, right? It's bearish. But all of this analysis, most of them are subject to what the CPI will be. So for most of you, you may just want to place your trade right now, or you do the waiting, and of course, doing the CPI, and of course, you can trade the news and of course, make money for yourself. So guys, thank you very much. It's already 9 o'clock. And so let me drop my number. My name is Emmanuel. This number, you can chat me up, Emmanuel Udogu, right? 09026264507. So I want to believe you got value, right? You got value. You got value. So join us again tomorrow for another exciting session. Join us again tomorrow for another exciting session. Thank you guys. Bye for now. Christy, I can see you there. Thank you.